go with this.
Yeah.
All right. Good morning, everybody. Sorry to get to you late. That is my fault. My camera was misbehaving. Good morning, everyone. I'd like to welcome you all to the Daily Energy Markets podcast. It's June the 11th, Tuesday. I'm delighted today to be joined by Narendra Taneja, India's leading energy expert, Victor Yang, senior analyst at the JLC Network Technology, and Rob Barnett, senior global energy and commodity analyst at Bloomberg Intelligence. Thanks, gentlemen, for joining us. Narendra, you're going to be our star guest this morning because we need to hear from you on the quite surprising news that hit the world last week, which is that, yes, we have Narendra Modi back in power and reconfirmed, but not at all in the numbers that were expected, losing 63 seats in the parliament. So give us your first take on how surprised were you or other analysts, and what does this mean, if anything, on the surface?
Well, good morning, everyone. Yes, most of us were surprised. And of course, the target of the ruling alliance was 400 seats in a parliament of 543. So, I mean, there were some doubts, the ruling alliance may not be able to hit, that target. But almost everybody, all, pundits and all experts and politicians, others showed that BJP would be getting the full majority of its own. And of course, plus the alliance partners called the NDA, or National Democratic Alliance. But when the result came, it was kind of, the country was in for a surprise, except the opposition parties like the Congress Party. They say they were not surprised because they have been claiming that they are going to get something like 297 seats. Their alliance is called UPA, or it was called just simply India. So yes, so a surprise. But at the same time, now when we look at the horizon and the way, the National Democratic Alliance, the ruling alliance, has been put together and the ministers have been sworn in, the government has started functioning since yesterday. It's called Modi 3.0. It seems that, things are okay. Of course, it's always good to have, full majority of your own in parliament. So that you don't have to depend on your alliance partner, because alliance partner, they come with their own political direction, their own ideology, their own philosophy, their own experience, and their own expectations and ambitions. So it's always a bit tricky job. But so far, it seems that, the alliance seems to be very firm, very concrete. Portfolios have been allocated. But the good thing is most of the critical portfolios, such as finance, petroleum and natural gas, renewable energy, conventional energy, are all with the BJP, which is, as you know, is the main pillar of the coalition. So which means the message is clear as far as energy is concerned, and including renewables or the finance. That's all is basically the continuity is going to be maintained. That's the kind of message which is coming out. But that said, at the same time, you see, it's a coalition. Coalition means that there are many others who basically you have to depend on for your survival in parliament.
Yeah.
But if you go by the experience of the last 30 years, except for the last 10 years, majority of governments actually have been coalition governments. And if you look at the economic history of India, coalitions have done well and they have delivered well, especially when it comes to economic growth. I mean, coalitions can be chaotic. They can be at times bumpy, but in terms of delivery, they seem to work fine as far as India's history of the last 30 years is concerned. I mean, this coalition also, because there is a strong prime minister, there is a strong government, but so sometimes you might hear noise, sometimes you might hear a bit of, bargaining and all that. But my take is that, it's a reasonably good government, a stable government, and I think it's going to be business as usual. But along the way, even if it's a very smooth engine, you might hear noise from here and there because that's democracy. And what happened on the 4th of June is surprise. There's again democracy. Indian democracy is very vibrant, at times unpredictable. But the good thing is that if you look at the history of since 1991, when India launched the economic reforms, India has done very well on the economy and energy. The story is more or less the same. So my sense is that things are going to go fine. I don't know whether it comes to the major reforms, let's say privatization of big oil and gas companies, because majority of oil and gas companies in India are still government owned, such as Bharat Petroleum, Indian Oil, or Hindustan Petroleum, Oil and Natural Gas Corporation. Whether, especially Bharat Petroleum, which used to be called Shell before it was nationalized in the early 1970s, or Hindustan Petroleum, which used to be called Esso, which was nationalized again in the early 1970s, whether these companies which have got foreign DNA would be privatized. These are very efficient companies, and these are kind of on the radar as per the government's plan. Would they be able to do it? Would they be able to do it faster? Because they tried last time also. We don't know that. So on these two companies, we're going to keep our fingers crossed. But otherwise, it looks like it's going to be business as usual.
Okay, thanks, Narendra, for that comprehensive. And we'll come back and kind of pick a bit at the nitty-gritty of India's, 2047 economic plan a bit, and see if where we are with that. Rob Barnett, nice to have you again with us. Let's go across to the US from India. We're seeing, let's talk about oil prices and trends. I mean, we've seen a little recovery, a little blip of recovery at the start of this week. Of course, the market has spent the last week absorbing the OPEC Plus announcement, the news of more oil set to come on from the group in the fourth quarter. And of course, we saw some action by, give us your take on that. That was a bearish sort of tone, I suppose, as would be expected. More supply means prices go down. But we also have a news bulletin headline today saying that the shorts, those funds that were holding shorts, have really begun to sell off in the last week or so, and that's really what brought the price down. Would that be your take? And are we done? Have all those shorts now liquidated those positions?
Yeah, I think that you characterize the reaction to the OPEC Plus meeting well. I think it's hard to excite the market right now. We've got a relatively abundant supply picture. Demand is relatively weak, and just like we heard in India, we've got a lot of really interesting things happening election-wise this year, also in Europe, US. Yes. So I think a lot of political factors may weigh into the market as we kind of think about the trajectory over the next 12, 18 months. And, my general sense is that, the fundamental picture there in the oil market is again, it's generally characterized by ample supply, weak demand. So I think the market will probably be thinking about, some of these bigger picture questions. The future of EVs. Will a future potential presidency of Trump 2.0 change America's stance towards electric vehicles and this sort of thing?
We do have another headline that said that the US has been considering, or has gone out there and bought some oil for its SPRs, planning to, and that has also apparently been behind the slight upward impetus the last couple of days. Now, why would the US be doing that at this point in time?
Well, I think as you may be aware, the Biden administration has tapped the oil SPR in the past, and they've under obligation to refill it. And I think they're looking for prices that look favorable to do that. And so I think that's more of just a mechanical operation of wanting to put reserves back into the SPR, and not anything specific about the price here at the moment.
Yeah, or they expect prices that they've hit the bottom essentially, and are expecting the only way is up, perhaps. Thanks, Rob. Victor, let's go to China, and let's talk about prices, because we've seen, of course, Saudi oil exports. Another headline we have today is that the exports to China have dropped for the third month in a row, and that's despite cutting OSPs, their prices. So why is that? Is Russian oil still looking more attractive? Is it essentially a demand factor? Give us your take on that.
Yes, well, balance from some countries from the Middle East had declined over the past couple months. And say in April, Russian cargo surpassed those from Saudi Arabia by a great margin, quite dramatically. And this we can ascribe this to the difference between the prices too. And in addition to balance from Russia, there could be some supply, I mean, more availability of other cargoes that were relatively cheap too. And for now, China's demand is not strong either. Say in May, its imports rebounded month on month, but plunged year on year. And even now in June, when summer begins, and we usually see growing fuel demand in the summer when travel grows. Say the college entrance exams just ended yesterday and 2 days ago. And now we are going to see more tourism. But we're also looking at the lowest, I mean, this year's lowest crude run in June, because their crude runs had surpassed demand in the past few years. So now both state-owned refiners and independent ones are cutting their crude runs, and they still have plenty of maintenance. So this is kind of combination that we do not usually see in the past. In the summer, in the beginning of the summer, the lowest crude run, yes.
And will you expect that to go into the third quarter? I mean, we expect that trend to continue for the next 2-3 months?
Well, we expect you mean the demand trend or just the balance from Saudi Arabia?
Okay, that's the balance will come from. Yeah, I can hear you. Yeah.
You mean the balance from Saudi Arabia?
No, I mean, as we go into the third quarter, you said there's been like less demand in general in China. There's been bad margins for refinery.
Yes.
That was unusual to an extent. So do you expect that to continue July,
Yes,
August, September?
And we expect a rally in July when there is less refinery maintenance and more travel, because students will be off school in July, and then we have the summer holiday, and the temperature will be much higher too. And it's also quite unusual now because we had a lot of rain in southern regions, including Guangdong province, and this has dampened diesel demand quite dramatically. And now China's,
Yes.
And now China's oil product exports are quite low to, I mean, gasoline and diesel.
Yeah, and those margins haven't been very healthy. Thanks, Victor. Narendra, back to you. Let's stick to the Indian economy. You mentioned about the potential impact on oil and gas in terms of the general policy, but also the privatization. But let's talk a bit about the budget, because I mean, Modi's pledged to turn India into a developed economy by 2047, the whole move towards the services industry. I mean, those are big commitments that he's been working on independently for 10 years. He's had free reign. Now no more. We need consensus going forward, right? And as you said, there could be hiccups along the way politically with posturing, let's say. But I mean, let's be realistic and say, you know, fiscal consolidation, for example, was one of his big plans. Are any of those short-term plans at risk? You know, the hard drive that he was doing without any opposition. Could you see that timeline being extended in any way or adjusted?
Well, I mean, if you look at the economy as a whole, since 1991, when India started economic reforms, and that was, by the way, done by the Congress Party, which is in the opposition now. So on economic issues, economic directions, there is kind of more or less national consensus. Most political parties, except the left parties like the Communist Party, there is a kind of consensus. So I don't really see whether the alliance partner of the Modi government or for those in the opposition, they become important because this time the government is going to face a very strong and robust opposition. So, but even in the opposition, when it comes to the economic direction of the country, you don't really see many challenges. The only difference are going to be in the two areas. Number one is the privatization. Should the big state-owned enterprises, whether in the energy sector or in the non-energy sector, be privatized? This government might want to do it. but then it may face some resistance in parliament from the opposition party, maybe even a couple of the alliance partners. That's number one.
Sorry, just on the privatization, because even before this election, that resistance was there, wasn't it? So now we're going to have double the resistance, supposedly.
The resistance was even before the election, and resistance was also from within the BJP. There is a section within the BJP which is against, privatization. Partial privatization is okay. Maybe if there are 5 companies in the energy sector, you may privatize 1, but not 2.5 or 3. So there is a resistance even within the party. I mean, there are lots of people in India still. India is still, broadly speaking, a bit left of the center. Let me put it this way. You see, so second area which is important is the economic benefits of the reforms. India is today roughly $4 trillion economy on nominal basis and about $13 trillion economy on PPP basis. The country is doing very well. It's a robust economy. You can see the fruits of development practically all across the country. But we still have lots of people who are not really the big beneficiaries of the reforms or the economic gains that India have made, which means the ruling party, Modi 3.0, is probably going to do more for the people who are underprivileged or poor or below energy poverty line or below energy poverty line, so on and so forth. And opposition parties, especially the Congress, which is more left of the center than other mainstream parties, they may want government to do even more. They have already promised more. So which means when we say doing more for the underprivileged and poor, that means handing out cash, handing out houses, handing out free education, medical care, and so forth. But so there is going to be a bit of competition between what the opposition wants and what the ruling dispensation wants to do. And my sense is the ruling dispensation, Modi 3.0, is going to do much more for the underprivileged and poor, and in terms of subsidies, handouts, doles, than the opposition party might actually want. So this is going to be a dimension which is probably going to get more traction from the government and therefore from the supporters. But otherwise, I think the India's target to become a developed economy by 2047 is quite achievable. India is already the 5th largest economy on the nominal basis. On PPP, India is already the 3rd largest economy. In next 4 years, India will become the 3rd largest economy, overtaking Germany and Japan. So I think fundamentals are strong. When you travel across the country, you meet with people, you meet with industrialists, you meet business, you meet ordinary people. People are very ambitious. There is no resistance to reform. Everybody wants to be rich. And if you tell the people, I want to be a billionaire, chances are people are going to say, well done. That's a good ambition to have. So unlike many other countries where you say, if you're a billionaire, people hate you or people in India, it's just the opposite. It's more like the United States. So that's a good thing. And the government is going to push through the reforms further. But this time, the reforms would require more internal, consultation within the alliance. Not that you can do it something announced just like that. But my own sense is that overall, the trajectory is going to be fine. But there might be some resistance, especially when it comes to privatization. But otherwise, I think, the economy is in the right direction and the overall sense is right. But let's not forget one thing. It's very different thing when you have the government of your own, full majority of your own in parliament, and when you are running a ship called a political alliance, a national democratic alliance. It's going to be a bit tough, more consultation, all that. But I think looking at the prime minister, look what he has done so far. Look, the economic finance minister is the same person. Petroleum natural gas minister is the same person. Foreign minister is the more or less all the big powerful ministers are back in their position. So they know how to steer. And prime minister knows how to steer. I don't see many mountains or the Himalayas along or the China walls along the way, but there's going to be a bit of noise.
Okay, thanks, Narendra. Rob, let's go to the US. And talking about trillion-dollar economies, let's talk about trillion-dollar debt, because the US debt is about to hit soon, one day, $35 trillion, okay, and climbing. And there's been a few headlines this week in the news about, oh, we need to do something about this. Probably too late, aren't they? I mean, they're stuck, aren't they? This whole Fed policy as well and how that plays into it. We're seeing one day a headline saying, yes, we're still expecting one little rate cut this year, which is important as far as debt is concerned, I suppose. But then inflation is still sticky. Now, we've got the election obviously coming up. Does this one rate cut, if we get it in September or not, make any difference? And what are the expectations beyond November? Do you think if we continue to see the US economy perform as it is?
Yeah, so the federal rate cut policy in the US is in theory an apolitical decision as opposed to one that's with an eye towards the election. But let's see how it goes. I mean, my general sense is that most observers of the US anticipate over the course of the next couple, if you have a multi-year time horizon, I think expectation is that rates will come down over time. The pace with which that'll happen is going to be, I think you got a wide spectrum on kind of how quickly you might see rates come lower. And my sense is that the numbers generally for the economy are pretty good, right? So as long as you have strong economic growth numbers, strong employment numbers, there's not going to be a whole lot of pressure to cut, at least in a rapid way. And the point of the higher rates is exactly to tackle inflation. So I think that if you've got commodity inflation or any other kind of inflation out there, Federal Reserve is trying to, rein that in to some extent. And so, my sense is that if there was a lot of anticipation that we probably could have several rate cuts this year. I don't think that's
that was earlier this year,
consensus.
Obviously.
Yeah.
Okay, and I mean, what about the dollar and what that's doing in terms of, these rates long higher for longer are keeping the dollar propped up. What's that meaning for energy and commodities in terms of pricing and demand?
Yeah, I mean, I think that these kinds of things are a little bit, nebulous. I tend to personally default more to sort of, market fundamentals. Obviously, if you had a weaker dollar, that potentially could be an upside catalyst for oil. But as an American, that's certainly not something I'm anticipating. So let's see how it goes.
Okay, well, there's our survey question for today. Oil prices will hit $90 in the third quarter and hold for the year, despite the expectation of added oil in Q4. Again, we've seen a slight blip recovery above 80 as opposed to the slide below it that we saw last week. People still calling for higher prices despite, and obviously we just had a view of the American economy and how it's doing well, Indian economy, Chinese economy is doing okay. Agree or disagree, though? Are we going to hit that 90 as we see the jet fuel demand, gasoline demand kick in the third quarter, travel season in China, and will it hold even with more oil coming, expected to come on? Agree or disagree? We'll have a look on that. Victor, let's talk a little bit about just trade. US, China. We talked a bit about the trade dispute, the tariffs that the US declared a few weeks ago on EVs, etc. But now we see also some headlines on Europe, kind of catching up with the US attitude, if you like, the Chinese products dependence, basically, on Chinese materials and trying to lessen that. Are you sensing that in China? Are we expecting a reaction on the trade front from the government? Is there some concern there at all?
Well, sure is a great concern. The trade dispute between the United States and China. And because some other countries, as you say, European countries are following. And this has caused great difficulty in China's development, because when we had a lot of difficulty to tackle inside, domestically, and internationally, we had to face a lot of pressure from the United States and a lot of hindrance. So for the EU industry, for instance, the countries now developing cooperation with more countries outside the United States and even outside Europe, such as along the Belt and Road Initiative. So it's aiming to, it can choose to grow faster cooperation with some other countries to sustain the development in the future, when some countries in Europe and the United States are resisting Chinese EVs. Yes.
Thanks, Victor. Narendra, we haven't had you on obviously since we had the OPEC announcement a week ago, more than a week ago now, their roadmap, and a very detailed roadmap for this year, for next year. What's your interpretation on why they offered so much at this point? Is it to do with internal consensus within the group, do you think? Is it because they have a clearer view of demand from India, demand from China? Why do you think they did that?
Well, you see, I think when you look at all the announcements and the documents and the reports that OPEC has, published the last 2-3 months, I see a bit of frustration there because they have tried their level best. They want to take the prices up to $90 per barrel. Saudi Arabia in particular, they have basically used every possible trick available to them in order to push the prices up. Yet the prices are where they are. So I think they're a bit frustrated. They have their own agenda, of course, which I understand. But at the same time, I think looking at the ground reality, I mean, demand, where the demand is going to come from. China's economy, we all know it very well, is struggling. And it has nothing to do with what's happening globally. It's more to do with what's happening within China politically, because their priority right now are more political than economic. India, for instance, India is already consuming something like 5.5 million barrels, is going to go up to 6 million barrels in time to come. But at the same time, renewables are doing very well in India. But demand is going to come from India. You is going to see more demand from India, but it's going to be gradual. It's not going to be dramatic. But you look at Africa, you look at Latin America, you look at the developed world. So where the demand is going to come from? Now, my own sense is that, OPEC is a bit frustrated. They want oil prices to be $90 per barrel, Saudi Arabia in particular, because they have their own budget, their reasons, they have their own, transition issues and all that. The new city they're building, the transition of the economy.
Yeah, and not just Saudi. I mean, they all need the money, right? They all need the cash.
They all need the money. But at the same time, my sense is that, that at the same time, countries like India and China, Japan, Korea, they're talking more with each other on oil prices. There's a bit of informal alliance that people pick up phone and talk about it. Whenever OPEC makes an announcement, these big importers, they talk with each other, how to deal with it. At the same time, like India, as a response to what OPEC wants, India is importing more crude oil from Russia. Last month, we imported than ever before. So it's a message to OPEC that Russia may be part of OPEC Plus, but then Russia offers special discounts to countries like India. So I think the whole game has changed. And therefore, OPEC feels frustrated and they're trying their level best. But I think within OPEC, with which direction, for instance, Saudi Arabia in particular, they follow is going to determine. But I think the golden days of OPEC, probably are over. They will have to do now more in terms of their expectation in consultation with big importers like India, like China and others. Those days when they could look at the world, strictly with their own prism, ignoring the prisons of other countries. I think that era is over. Now they will have to follow a more collaborative approach, and so that they can look at future, look at the coming seasons and months and decades especially together with countries like India and China.
Yeah, and thanks, Narendra, and of course, one of those new dynamics is U.S. production. Rob, we'll just end with you, Rob, and not to talk about U.S. production. I just wanted to get your quick take in 1 minute, seeing as we started a bit late. We'll give everyone another minute. Commodities. I mean, we've seen, like, in terms of base metals. Let's look away from oil a bit. We have seen quite a run, haven't we, this year so far? But a little bit of tempering in the last week or two. Is that just profit taking on those markets, or what is that? How would you explain that commodities have kind of taken a breather, base metals?
Well, I want to respond to your question that you posed to the group too. It got me curious. So yeah, 3Q oil price. I'm looking here at consensus, and consensus is at 85. So, 90 seems quite optimistic relative to, where the, where the street's at. Now, as for general commodity landscape and, what Narendra was just saying, I was going to sort of offer that I think that, this idea that OPEC has, maybe seen its glory days. It sort of resonates with me too. And just because of the U.S. supply growth story, really the North America supply growth story. Look at what Canada's been doing as well, and OPEC has just been ceding ground for quite a number of years now, and it's really hard to exercise power over the market when you have countries like the U.S. and Canada just really sort of filling the vacuum there. And so I think if you think about OPEC's power, you almost have to look and sort of say, is there going to be a pause in that trajectory? And as for general commodity landscape, I think one of the interesting things that I think you're seeing across not just oil, but the other commodities is the energy transition story, right? And so whether the future of energy has a lot of open questions about it, but a couple of the guests here have also mentioned electric vehicles, right? And that's going to require tons of other materials, metals, copper, so on down the line. And I think there's a sort of a great backdrop for sort of commodity landscape in general when that fundamental demand picture incorporates all of the transition that could be occurring over the next couple of decades.
Thanks very much, Rob. Yeah, and I mean on the OPEC front, yes, certainly the dynamic is certainly changing, and this dilemma of market share, right? But they have to keep the price also supported. And how long will they continue to take the brunt on their own? And while countries like the US benefit. So let's see how that unfolds. Thank you so much to Rob Barnett, Narendra Taneja, and Victor Yang for joining us this morning. And sorry to keep you a bit late. Thanks so much, gentlemen.
Thank you. Thank you.
Thank you.
Thank you. Thanks, everyone.